Good evening and welcome back to our special report into the fascinating world of economics. In today's sessions, we will dive into a complex subject of monetary policy and its profound effect on business. To understand this topic better, we have an expert with us, Mr. Udams. Welcome, Mr. Udams, to our shows. So let's start with the basics. Udam, can you explain to our viewer what is monetary policy in simple terms?
Well, yes, of course. Monetary policy in simple terms is a tool used by central bank of any country to control the supply of money, interest rate, and other economic conditions in the economy. Of course, we divide monetary policy into two. We have expansionary monetary policy and we have contractionary monetary policy.
Well, now I understand that there are two types of monetary policy, expansionary and contractionary. So could you explain to our viewer in more detail about these two?
Well, of course. So why don't we start with a contractionary monetary policy? So the main aim or the purpose of contractionary monetary policy is to slow down the economy to control the inflation by reducing the total demand in the economy. For example, a real world example we can see from this is that in around 2022, 2023, we can see that all over the world there's a massive inflation, around 8% all over the world. So what we see, the government from central bank from different countries to fight this, they try to implement a contractionary monetary policy by cutting interest rate. Yes. So now why don't we move on to the expansionary monetary policy. So the main aim and the purpose of the expansionary monetary policy is to stimulate the economy, reduce unemployment, and prevent deflation. And also another real world example we can also see from this is that, up in the United States of America, after a couple of years of spiking interest rate, we see that there's debate all over the country to whether the Federal Reserve whether they cut interest rate or not.
So in summary, it is a balancing act between controlling inflation and stimulating the economies. Now I'm curious about the actual tool at the disposal of central banks to manage the monetary policy. So could you share some insight into this?
Well, yes, of course. There are roughly around 5 tools for the central bank to use for both expansionary and contractionary. First, they can set interest rate. Second, they can do a OPM, open market operation, when the central bank buys government security. Third, they can do quantitative easing. Fourth, if they can setting the requirement reserve. Fifth is by setting future expectation. These two work can be only working separately or working together. So for example, let's say in expansionary monetary policy, the government can stimulate the economy by cutting interest rate.
I see. That's quite a toolkit. So how do this policy, whether expansionary or contractionary, affect the real business?
Well, of course, both expansionary and contractionary affect all parts of the business. However, not all business is going to be affected the same way. For example, in a expansionary monetary policy, what will happen to the business that the government or the central bank will cut down interest rate. What will affect the business is that the business can borrow money at a lower cost. This can allow the business to expand their business operation cheaper than before. This way, the company can increase their revenue by capturing more market. Or they can go a different way by, as now borrowing is cheaper, they can expand their business and pursuing economic of scale. So at the end of the day, their total production will cut costs and then they will be able to sell their product at a lower price. This is how both the expansionary and contractionary affect business. However, not all business is going to be affected the same way.
That's a very insightful explanation. So the decision made by the central bank can have significant impact on the business landscape. But you mentioned earlier that not all businesses are affected at the same way. So could you further elaborate on this?
Well, just of course. So before I begin my explanation, I would like to set the stage for our audience so it make it simple to understand. So let's say there's only two countries trading with each other and all else being equal. During a period of a contraction monetary policy, the government will set interest rate higher. Thus, they will lessen the supply of money. So on the assumption that the demand for our money is going to stay the same, this will increase the value of our currency. And this will be a good news for our company who are operating in mostly importing product, spare part, or raw materials. So by that way, due to the fact that our currency is now valued higher, they will be able to import the same amount of product with a less amount of money, so which effectively lower their cost, which make them more competitive in the domestic market. However, for our business operation who mostly operating in exporting product, raw material or any spare part, this will actually make a worse outcome for them. Now, since our currency is higher, when exporting our product, the other country, when they want to buy a product, they will need more money to buy the same amount of product, which make our product less competitive. So this is what will happen. This is what I mean by it affects business differently. So I cannot say how a monetary changes affect your business. All I can say is that it will affect it in a certain way. The way that monetary policy affect your business is depend on your operation. And vice versa, during a expansionary monetary policy, the opposite of what I said will affect your company.
Absolutely, Adams. That has been a pleasure for us having you with us today. Your insight on monetary policy and how it affects the business have been incredibly enlightening. I'm sure our viewers have gained valuable knowledge from our discussions. Thank you so much for your time, and that's all from us today. Stay tuned for more updates on important topics.
Hey, play the outro music. Outro.